Well, in our last review on the S&P 500, we were going to expect an ABC move to the downside as a minimum here into the typical retracement zone as per our preferred stance. Now, we do now look to have achieved that. We've got this ABC move to this point, having now tagged just on the 50% retracement zone of this move higher here, and the 50% retracement zone is 1184, so I've hit that to the tick last night at 1183, and we did have some buyer support come in and price head back up and close at 1193 on the day. So we've had some early inklings that there are some buyers testing the waters down here in our typical retracement zone. Now, this typical retracement zone aligns of 50 to 61.8% areas, and that is 1158 to 1184, and as mentioned, we've just tagged last night into the upper boundaries of that retracement zone. Now, another thing to look at here is that we are now nicely oversold, so that is a nice symmetrical ABC pattern to the downside. So even though we can still head a little bit lower here, I'm not going to be concerned if 1158 can hold, and that's in the lower boundaries here of what would be considered a typical retracement of this run up high here off the October lows. So this is where things sit at the moment. So all in all, no concern here at the moment. This is a healthy retracement. We've gone into an oversold position, so even though I wouldn't really like it to head too much lower, we are in the typical retracement zone, so we now just have to continue to analyze any buyer support coming in around this zone here. Now, on the more negative side, and we do have to continue to look at this, and it's something I've been harping on for quite a few reviews now, is whether this is more of an ABC run to the downside still taking shape here. So this is our wave A, and this is our ABC expanded flat pattern for our wave B, and then this is our wave C to the downside. Now, some things to look at here. If this is our alternate count, what I'd be expecting here now is an acceleration, quite a strong acceleration of price, because more than likely our wave C would turn into a 5-wave move. That is typical for a wave C, and a 5-wave move means a period of impulsive price action to the downside. So what we have here is our wave 1, our wave 2, and this would therefore be our wave 3. And if this is a wave 3, it needs to start accelerating to the downside. So this is the type of price action that we would be expecting, and certainly if we surpass this 61.8% area at 1158, then I will be looking at this alternate count as having triggered. So a 5-wave move would look something like this, perhaps a small period of consolidation here right on this support area, but then would be looking at another final move to the downside here. Now, on the alternate count, the wave A versus C equality area here is around the 1150 area, and as we keep noting, major support is also just above 1000, and even more importantly and pertinent is this 50% retracement zone. Now, this larger 50% retracement zone is a retracement off the larger move off the March 2009 low. So that hasn't been tagged yet on the S&P 500. So definitely something to consider if price movement to the downside starts accelerating. If it doesn't, and we start getting buyer support, we may get a little bit more a dip, but if we start getting buyers coming in again like we did on a minor level last night, especially within this zone, then I'll be sticking to our preferred view, and that will be looking for a 5-wave move to the upside evolving here. This is our wave 1. We've got our ABC move for our wave 2, and then we'll be looking for this high swing low pattern to trigger to the upside, and that would be triggered once we get above this 1292, 1293 area, which is our wave 1 high. So this is how we're seeing things at the moment. This area does need to hold just here. If we get an acceleration below here, then we'll certainly be considering our alternate count before we get the next run higher.